The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. My name is Greg Pinn. I'm Head of Strategy for iComply Investor Services, and I'm very, very excited to be here with Amber Scott, Founder and Chief AML Ninja for Outlier Canada. Today, we're going to focus a lot on what are the interesting trends and innovations in AML, specifically focused on AML in Canada, which is where Amber works, operates, and is an expert. A little bit of background on Amber. As I've mentioned, Amber is an AML expert. She's a certified anti-money laundering specialist, a certified privacy professional, holds a mutual fund sales designation from the Investment Funds Institute of Canada, and is a first-level fellow at the Life Management Institute. She holds degrees from the University of Waterloo, as well as the University of Aspen, and she has an obsession with understanding the risks and devising actionable solutions to lead work in the financial industry in Canada for accounting firms, consulting firms, and financial institutions. She is the founder of Outlier Solutions, which is a consulting firm providing AML solutions to Canadian reporting entities. Have I missed anything, Amber?
Thank you. That's about it. And I usually sum it up by just saying that we're big compliance nerds and we try to keep people out of trouble.
I love that. As a big compliance nerd myself, I very much appreciate the title. So we're gonna jump right in and sort of start off. If you're able to follow online, you'll see the questions as they come up, and as Amber and I discuss them. So Amber, as more and more financial businesses being transacted non-face-to-face, how does that impact KYC policies and procedures?
So I think there's a lot of really good opportunities there. And the biggest thing that I'll say about policies and procedures, and the issue that we see again and again in audit and that we see coming up in examinations with regulators, is that you have to document the things that you're doing. You can implement amazing solutions that do all of the right things, but if you don't document how you're doing those things, it's a problem. And those things need to be documented, even if you're only doing them some of the time. So one of the funny questions that I get into with people is sometimes I'll have clients that tell us, oh, well, we meet with people face-to-face all the time. All the time? No exceptions? Okay. And generally, we can find an exception where there is some sort of non-face-to-face identification. Those things have to be documented, even if it's an exception process, even if it's sometimes. And I think that one of the really good things about non-face-to-face is that you can start having, when it's done well, a lot more automation. And we're seeing a lot of tools that are becoming more automated, even for small companies, so that have dashboards that are available, that have services that are available, even if it's not at a massive enterprise level, where you can do that non-face-to-face identification, you can capture the information, you can have that data, and that's workable even if you're not a big bank. And I think that advantage of being a large organization is fading over time as technology solutions get better and better.
Thank you so much for that. I think that's very interesting, and we're seeing that more and more with our business as well. What differences are you seeing in the KYC implementation these days? I know crypto is a big part of what we do. I think it's a big part of what you're doing. What differences are you seeing in the KYC and AML implementation between traditional and crypto systems?
So this is always a funny one to me, because when I look at it, I always have the impression that because crypto companies tend to be so tech savvy, that there will be a less manual, a more technology oriented, a more automation oriented approach to KYC. And I'm surprised to see that that's not always the case. When that becomes most apparent, I think, is when we have a bull run in the cryptocurrency space. So when you see the prices just going up and up and up, and at the same time, you'll see exchanges that have 3 months in terms of a lag time between when you set up your account and when your KYC is complete. And that's really problematic. If I can think of a single really great argument within the crypto space for automating KYC processes as much as possible, that's probably it. Because if you expect those curves to reoccur, if you expect that you're going to have times where you're trying to onboard a lot of clients very quickly, then you need a more automated solution. In the traditional space, I see a lot more fear of automated solutions. So one of the things that we see is hybrid solutions that get implemented by banks or credit unions, where they might have part of the process that's automated, so they're collecting data in a way that's automated, and then they're asking people to come into a branch to finish the process. So you've either got to come in and present identification, or you've got to send in, a void check or certain physical documents in order to be able to complete that process. And again, I think those are places where a lot of people will drop out of those processes, whether it's with a crypto company or whether it's with a bank. As soon as you have those points of friction where there is less automation, where someone's not able to complete that process instantaneously and they have to physically go to another location, or they have to go and find a particular document, then you'll have people dropping out of those processes. Similarly, even in the traditional financial world, if you have a really good promotion that's on where you're attracting a lot of prospective new customers, you don't want them to fall out of that pipeline. You don't want them to drop out of that process. And that's really a commonality between the traditional fiat and crypto systems, is that the longer those processes take, the more you'll have people falling out of those pipelines. In crypto, I think customers are definitely a lot more sensitive to it. So certainly if you look at forums, you'll see a lot more criticism when the processes aren't automated. In particular, when there's a combination of the processes being less automated and being seen as more intrusive in terms of the types of information that's being requested, or multiple requests from information. I think that the customers in the crypto space tend to be more tech savvy individuals that are looking for a faster process, that have different expectations, and that are very willing to publicly complain about them on a variety of forums. And so that I would say is a big difference. If you're,
we've seen some very, very similar things. I think you hit on some really great points there. One, we've seen a lot. These fiat institutions have thousands and thousands and thousands of auditors and analysts doing their AML, and those institutions are too afraid to get rid of those teams. And automation often can bring a less human approach, and they're afraid of that. And I think on the crypto,
I would argue, because people talk about that all the time, where you talk about what are the functions that AI takes over. And Susan O does some really brilliant talks in the space of AI and the things that AI does well. And AI really does repetitive tasks extremely well. They don't do creative tasks very well. They don't do problem-solving tasks very well. And as a human, the tasks in my work that I find rewarding aren't the repetitive tasks. It's really those creative problem-solving tasks that give us meaning in our work, that are the types of things that we want to be doing. So I would argue that the automation actually frees up those humans to do the more higher order tasks that are the most satisfying things for people anyway.
Oh,
I think there's a win there.
Where you're coming from, I think what you're pointing out, if not to put words in your mouth, is the higher level, the tier 2, tier 3 analysts, the ones that actually need to go and run an investigation. That work has to be done by humans. It's just not work that can be automated. The tier 1 stuff, where it's literally just, match, not a match, match, not a match, match, not a match, where you're going through looking at data, reference data against customer data. That, I think, is where a lot of there's some interesting technologies that have come out lately that may reduce some of that work. And really, I think exactly to your point, pushing the more interesting creative stuff out to the fore. I think the other thing that you said, which bears repeating, I think, is, these crypto exchanges are built on by technologists, and usually by people who are very enthusiastic about crypto and all the power that crypto can bring. They're not, in general, bankers or people with finance backgrounds, and they're definitely not compliance people. And I know for myself and for us at iComply, watching this over the last 12 to 18 months has been very, very interesting in looking at technology enthusiasts and evangelists now trying to say, okay, wait, there's a regulatory landscape we have to work in. And we've seen that in other places outside of AML as well. If you look at Quadriga and the processes that they had in place and didn't have in place for holding sensitive financial information and backups and proper custody, we're starting to see this whole industry waking up to, wait a second, we have to act like a financial institution. If we're going to say it's money, we have to act like it's money.
To some extent, and the place where I think that always gets interesting is whenever you have a custodial institution, whenever you have someone that is in possession of other people's funds, there is an expectation that they're going to behave a certain way. And you're right. I think that we are, as a crypto ecosystem, slowly waking up to that and starting to figure that out.
Totally. I think we're in 100% agreement there. It's just a slow wake up, and I'm sure you and I probably follow the same message boards of seeing all these people, KYC is a scam, AML is a scam, and a big part of what I do is educating on why this is so important. You can fight it, or you can realize that these things matter, and these things are there for a reason.
And I think the other answer to that is that if you're building something that is custodial, if you're building something where you're a company in a particular jurisdiction, you're taking some very serious risks if you're not following the rules that exist in that jurisdiction. And there are ways to do things within the technology context where if you're building something that's completely non-custodial, if you're building something that's completely peer-to-peer, if you're building something that really is just code, that's a different story. But whenever you start having that conversation with people, the answer is, well, but if I do something that's like that, then I don't get to incorporate my company, and I don't get to, charge my 2% on every transaction, and that doesn't work for me either. So you don't get to have your cake and eat it too. You have to choose between those things, and it's one or the other. It's not Schrodinger's code. It doesn't get to be both.
I completely agree. Changing areas just a little bit. I know you are an absolute expert in Canadian regulations, and I think, looking historically, whether it's in AML or in securities regulation or in banking regulation, Canada has really led the way on ensuring the safety and security of the financial system. I think after the 2008 market collapse in the U.S. and in Europe, a lot of the Canadian banks sort of laughed at the rest of the world and said, "Well, we don't have to worry. We've been very careful." And so, with that in mind, I'd love to hear sort of what is going on with with the Canadian regulations that were drafted in 2018, and what are the interesting things that we are seeing coming out of Canada?
Sure. So in 2018, we had draft regulation that was published. There was a 90-day comment period. We're expecting the final version of it to be published in the beginning of 2019, so in the first half of this year. It hasn't been published yet, and I want to start this dialogue by saying once it's published, it is expected that there is going to be a period of 12 months or more for people to get compliant. So when I say these things, I never want people to panic and think, oh my goodness, if we don't do this immediately, we're going to jail. It's worth it to figure out how to implement things properly and to get good policies, procedures, processes, technologies in place to be able to do the things that you're being asked to do. And the intent of the government is really to provide time to do those things. And so one of the things that we've seen is that as far back as 2014, the government started talking about regulating dealers in virtual currency as money service businesses. So money service businesses right now are already regulated in Canada from an AML perspective, but those are just considered to be anyone that does remittance, so sending money, meaning fiat, foreign exchange, so again, fiat foreign exchange, and cashing or issuing monetary instruments. And so monetary instruments being traveler's checks and things of that nature, so those sort of near cash type of instruments. So those are the three things that would make something a money service business, and anything outside of that is not considered a money service business. If you try to register as a money service business on FINTRAC's webpage, so FINTRAC is the Financial Transactions and Reports Analysis Center of Canada, they're our AML regulator, and one of the questions is actually, are you doing business in virtual currency? So cryptocurrencies like Bitcoin, and if you check that box and you check nothing else, they'll actually call you back and say, hey, thank you for letting us know. You can't register at this point if that's the only business that you're doing as a money service business, but when there's a regulatory change, we will send you an email and let you know because you've submitted your email address as part of that process. So it is an interesting place. We do have some entities that are registered because they're doing some other aspect of that business already. So either within their exchange, they have a USD CAD pair or something like that. That's a fiat to fiat exchange, or they have some aspect of remittance within their platform. But there's other reasons that they're registered as a money service business. But anyone who's dealing in virtual currencies would be considered a money service business and regulated. So that would mean that they would need to be able to do KYC. They would need to have policies, procedures, a risk assessment, a compliance officer, train their staff about anti-money laundering. So all of those things would come into effect for those types of companies. So you're US based, and in the US, this has been the case for some time already. And those pieces of the framework are similar, although different in a number of very nuanced ways in terms of how that's carried out. In that regulatory package, there were also a number of changes that applied to all reporting entities. And one of the interesting ones from a cryptocurrency perspective was that there was a new report that was a large virtual currency transaction report. So right now in Canada, if there's a large cash transaction, so if any reporting entity receives $10,000 or more in cash, they have to do a couple of things. So they have to make a third-party determination, which is saying, hey, are you doing this transaction on your own behalf, Greg, or are you doing this transaction on behalf of someone else? And if the answer is, well, someone else asked me to do this transaction for them, then we try to get as much information about said someone else as we can. And then a report goes into FinTrack. So there's a large virtual currency transaction report, which would mean that if there's $10,000 or more received in virtual currency, a similar process would be followed and a report would be submitted to the regulator. So I think that's a pretty interesting one. There would be identification that would be required. And the implication there is that we may at some point have banks. We may have securities dealers. We definitely already have gold dealers and dealers in precious metals and stones that are accepting virtual currency as payment. So for those regulated entities, they're looking at what would need to be reported, even if they're not strictly a dealer in virtual currency. So I think that was pretty forward thinking in terms of the expectation that the use of cryptocurrency was going to become much more widespread, and certainly that we're seeing interest on an institutional level.
Yeah, and I think to add to that, looking at a global perspective, I think we're seeing that a lot as well with FATF recommendations coming out this year, where last year FATF came out and said, hey, you need to start thinking about cryptocurrency, and you need to treat crypto businesses the same way you do with fiat. That was reiterated in February this year by FATF. So we're seeing a lot of push from global regulatory bodies as well, and it's good to see nation states taking a very active role in that. I think what makes this so interesting with crypto is the behavior of jurisdictions like Malta and Gibraltar, sort of these crypto havens, which are sort of trying to work around some of these regulations, which is sort of an interesting play. We'll have to see how that works its way out in the next couple of years.
I think from a global perspective that this is one of the things that will probably push us towards looking at an approach where we have something, even if it's a little bit more like in Europe where there's passporting. And that would be relatively useful to be able to say, if you have a program and it works in Canada, maybe you could apply the same principles to other participating jurisdictions.
I think that, for the last probably 10 or 15 years, that's been the dream for AML. And I think, each country, I think Canada is one of the most guilty of this, is sort of insisting on their own rules. I think we can probably, for another day, we could probably talk for hours about Canadian PEP regulations and the way that Canada defines politically exposed persons for AML purposes. But
that's the piece where each jurisdiction has their different nuance. I think that's probably the biggest point of contention between technology and regulation, is that technology is so fast and it's so instant. So you can deploy your technology and be everywhere instantaneously, but regulation is very slow to change and it's very tied to the particular jurisdictions in which you want to operate.
Oh, I totally agree. So let's talk about that technology. and really taking sort of a non-regulatory look and looking at vendors and technologies. What technologies are you excited about? What have you in the work that you're doing, in the consultations that you're having with different institutions? What's getting you excited from a regulatory perspective, from software and services that are helping both fiat and crypto institutions reduce their workload and their costs?
I think the use and improvement of a lot of different AI applications is really interesting to me from a risk management perspective. So for me, that starts at onboarding. So your facial recognition. I have 8 brothers and sisters, and I can tell you that we used to borrow each other's identification cards, and we don't all look similar. So, but it was one of those things when you have someone who's underage and they want to go to the bar, they just borrow your sibling's ID and away you go, and that was really common. I think that with AI and machine learning, you can get much better at doing the facial recognition piece. So the distance, your nose, your eyes, your mouth, so where all of those things are. And I think AI will start to do we're already seeing it, a much better job of those types of pieces. I think liveness testing is really interesting. So the idea that you have to turn your head and do different things. It's going to be interesting to see how that relates over time to deep fakes. So I've heard a lot of people be worried about, well, what about this layering over technology? What about the ability to sort of fake these things? I haven't seen anything that I found that compelling yet. But I do think that's something that is going to become, in some respects, a bit of an arms race in terms of figuring out how to combat some of these technologies and make sure that that's an actual valid human. And it is now. I mean, anytime that we construct these systems, there are people that are trying to find ways around it. I think that the systems themselves, in terms of onboarding, so I know that I definitely want to talk about the challenges that you have because you're so multi-jurisdictional. But I think one of the really interesting things that technology can do is be able to flex and recognize people in different jurisdictions and be able to onboard according to different rule sets for different jurisdictions, which I think is very different from the traditional world where what you're looking at is, okay, we have an application coming in. Well, where is this person? Oh no, what if they sent us in the application from Toronto, but home base for them is really somewhere else? What if it's Paris? And then which rule set are we doing? Yeah, so how are you dealing with those things? And I think technology can pull out a lot of those pieces and really serve up a much more customized, much more compliant and streamlined experience for your user, just by pulling in those pieces of data at the outset and serving up the right experience based on the response of your applicant or of the person who's being KYC'd. That's really useful. And then from a transaction monitoring perspective, so just looking at transactions that might be suspicious, that might be problematic, I think that the use of AI, and especially AI that's taking into consideration, here are the things that when they were escalated, we've actually decided looked suspicious, and we've gone through and investigated them. And here's a flag that we have set that's always a false positive and can adjust based on those things, I think is pretty fantastic. Because one of the things that happens within rules-based systems when it's just strictly rules-based is that things change over time and those rules aren't necessarily sensitive to those changes unless you're going in and doing a lot of manual tuning. And especially when one of those systems is first implemented, it's really difficult for people to figure out which rules make sense for them or not. And part of the complaint from any user, from your biggest bank to your smallest startup that's first implementing a system, is how do we resource it? So what happens when we put in this new system and there are just thousands upon thousands of alerts and we're looking at all of these false positives and trying to dig through them? And so I think having more intelligent systems to deal with that is going to be a massive savings. And to go back to what we talked about earlier, I think will actually really help humans who are currently looking at alerts and just saying, I don't even know why this alerted. This is so banal that I'm not even sure why I'm resolving this. It just doesn't make sense to me that this would be a suspicious cue. It's just a rule that triggered, and it doesn't make sense that I'm even looking at it. So being able to deal with a lot of those in a way that's more automated and have the human work, so the pieces that actual people are reviewing, be cases and be things that actually require investigation and more looking into.
Yeah, I think you touched on a couple of things that I want to just comment on. The liveness has become a critical thing for us at iComply. Really, what we were seeing from a KYC perspective is, the selfie image where you just sort of hold up a sheet of paper next to your face with something written on it, and call that enough to do KYC. And that in this day and age is so easy to fake. Forget needing sophisticated sort of deep face technology. Anyone who knows Microsoft Paint can probably make that work with a Facebook photo. And so really where we're going with this is, and what we've implemented is true liveness. And what's great about liveness technology is that you can algorithmically require random behavior. And that becomes a very, very compelling thing, because the randomness means you can't set up something ahead of time. You can't create a video using different photos from Facebook. We can force you to show us emotions or facial expressions or say words that we generate when you create your video, which allows us to do this in a very, very cool, effective way. So whether it's transcribing text, whether it's looking at emotion, facial expressions, there's a lot of great things that we can do there. And there's a lot of interesting technology to connect direct through to the webcam, where you can't have someone sitting in between unless they're really, really, really sophisticated. And like all of these processes and all these technologies, it's how much security do you need where you've gone beyond what is reasonable for someone to break. That's a lot of what we're looking at from a KYC perspective, and a lot of very, very cool, exciting things happening on that side. It's a very interesting time that the technology to do liveness and the huge increase in non-face-to-face transactions have really come together nicely. And we're seeing more and more traditional financial institutions allowing more and more things that are non-face-to-face. So you don't really need to go into a bank nearly as often. The other thing I'll mention is, as I think you pointed out perfectly, face-to-face ID verification doesn't work very well. People are not that good.
We're really bad at it as humans.
I show you my passport photo from 10 years ago. I had no beard, was significantly, less of me than there is today. A human could easily say, well, that could be his brother, maybe it is him, maybe it isn't him. Whereas with these technologies with liveness, being able to measure those distances, those things that don't change about your face, the proportionality of your face, that becomes far, far better than what a human can do. And I think what we're going to see is the old way of your banker sort of like holding up your passport and looking at it. I think that's gonna be replaced probably with that liveness technology, even for.
Oh, absolutely. And those positions are your least trained, and like no offense to tellers. I have done frontline work. I have a healthy respect for it. But you're badly paid, least trained, and incentivized for moving people through as quickly as possible. And that's a hard place to be. You're not incentivized to really detect, this is not the same person. Is this you? Is it your brother? And reasonable. Next.
Yeah,
and that's a hard place to be.
I'll say I worked in KYC AML data for many, many years, and we often had clients who would ask us for photos with our data. And our answer was always, you don't want that. That is bad, because a shave and a haircut makes two people look very, very, very different. So we've talked about sort of some new technologies. I think let's talk about what ends up being the conversation that I'm sure you've had 1,000 times, I've had 1,000 times. AML costs continue to rise. They're growing and growing and growing, and there doesn't seem to be any peak to those costs. What are you seeing in the work that you're doing? Is there hope on the horizon? What what is going to change this upward trend of growing AML and KYC costs?
I think automation is part of that. A lot of times automation has an upfront cost, but then I think that it's more sustainable over time. So the more that you can have those more intelligent systems, those more automated systems, those more integrated systems, because I think there is a lot of cost and complexity. There is an expectation that all of your data, so if you are a big enterprise and you have 13 different business silos, and I have an account with you in 7 of them, that my risk rating is going to involve all 7 of those. So you're going to be able to say, yes, Amber has an account in these 7 silos, and if she's high risk in one, she's high risk in all of them from an AML perspective. So it really takes good technology to be able to do that, to be able to bring all of those things together. I think that slowly but surely we're getting there. And it's a lot easier, I think, for new companies than it is for companies that have existed and developed systems in parallel for different lines of business or acquired different companies over the years. There's always challenges there. But I do think that automation piece, and in particular, those smart automation pieces, are going to help a lot in that regard. I think in terms of AML costs, I wish that I saw a trend in certain ways, and that might be silly for an AML consultant to say. But it does seem to be just a growing Katamari ball of rules and spending all your money. I don't see that reversing itself, but I do think that we need to think about the effectiveness of these rules, and that's part of the conversation that becomes much easier and becomes much more measurable with technology. So when you can look at your rule set and say, well, this rule generated mostly false positives, and so when we adjusted it here, it made more sense. Those are things that you can pick up with the right technology systems very quickly and speak to very intelligently. That in turn, I think, provides really good feedback for regulators in terms of what works. So within every country, I think, and even internationally, the FATF has published some, you just have these lists of indicators that are miles long. And I think at some point we have to start looking at those and revising them and saying what makes sense, what has actually led to cases, what has actually led to investigations, and what are things that were just part of the rule sets that maybe made sense to us when we thought about them, but haven't actually resulted in any actionable intelligence.
I think you touched on what I think is one of the major frustrations with all AML professionals is what has led to cases. In the U.S., and I'm pretty sure in Canada as well, there is no way to know. It's actually in the U.S., and I think, again, I won't speak for Canada. In the U.S., it is illegal for FinCEN, our financial regulator, or anyone in law enforcement to provide information back to the reporter on the result of the SAR. And because of that, it becomes hugely frustrating for AML departments because it looks like a black hole. So I submitted a SAR, and this guy, I'm sure that there should be a criminal investigation on this SAR, but I never ever hear anything. And it's a double-edged sword. We want to encourage people to file SARs. We want to protect the people that file those SARs, the companies and the individuals themselves. We want to make sure that these people who they're not technically whistleblowers, but they're acting as sort of financial whistleblowers, that there's no risk on themselves. At the same time, the information, at least in the U.S., that FinCEN publishes on their successes are as generic and broad as you can imagine. It's
We're the same.
Someone in Ohio laundered some money, and we caught them because a SAR had been filed somewhere else. And and it becomes very frustrating. For us, when we speak to regulators around the world, we sometimes say, there's got to be something we can do to make this less frustrating, to feed that information back, to encourage this reporting. Sorry, go ahead.
Oh, I do think regulators have heard that, and that they're trying to figure out how to do it. It's a slow process. I am aware of at least one academic project, so a PhD level academic, that is trying to work out some of that type of data, obviously on a no names, like anonymized basis, but within Canada, in terms of what are the things that actually generated cases, and then of those cases, what are the things that actually were useful, actionable intelligence at an FIU level.
Yeah, I know.
So
In the U.S., there's 2 million SARs filed a year. The regulators claim that everyone is reviewed. I hope that's correct. I think where there's been a lot of difficulty is really when it comes to crypto SARs, because so many fiat institutions file a SAR for every single crypto transaction, and that's a lot of where we're going to need to start seeing a risk-based approach to crypto, away from crypto is the risk to what is the risk with each transaction
within crypto.
And that's been a very interesting transition. I think you definitely mentioned some other sort of critically important things. Consolidation, I've seen that as well. Large financial institutions, sort of after 2001, when the USA Patriot Act was passed, and these institutions just blew up. Sorry, let me not use that word. They grew significantly their AML and KYC controls. We saw a huge growth there in AML and KYC, to the point where they couldn't manage these huge departments. And now, almost 20 years later, we're starting to see consolidation. And that's been a very interesting change. And hopefully it will focus the effort, because at the end of the day, the more wasted effort, the more noise we produce, the less actionable intelligence we provide is. So, I know you work a lot with the crypto community. So, what advice would you give to a new crypto exchange or other crypto business around AML and KYC? If I wanted to open a crypto exchange tomorrow in Manitoba, what are you telling me I need to do?
Be strategic. So think about it early in terms of what you want your onboarding processes to be, what you want your technology processes to be. Don't wait until you're in that upswing to try to implement the technology, because that's problematic. Make sure you're thinking about compliance from the outset and actually implementing. So it's not enough just to have a binder on a shelf with policies and procedures. You actually have to implement those things. And thinking about it early on and building it into your process is important. And then I think from a strategic perspective, I mean, we always, as Canadians, I think we start in Canada. So people start here saying, okay, so my exchange is going to be based in Manitoba. I want to serve Canadians. Maybe I don't have French support, so I might wait a little bit to serve Quebec, but then I want to serve the world. And I think being strategic about that is really important. So who within the world, because we know that regulation is different in different places, where really are your target markets, and start understanding those, start understanding what the regulatory context is and prioritizing those as part of your business strategy. I think that's incredibly important.
So we have a question that relates to this from an attendee. So let me throw this one at you. My company just provides software for Bitcoin payment processing. KYC costs are just way too high to operate a business. What can I do to prevent money laundering without breaking the bank?
So I think that's always and it depends. It depends on what your business is, what rule sets apply to you. So really understand what rule sets apply to you based on where you're operating, and then implement based on those. But look for solutions, and there are solutions where you can start small, and those solutions will have a lower cost at the outset and scale with you. So I think that's part of it, is that if you're a regulated entity and you have to do AML KYC, you might start with a place where you're using, the small business dashboard version of a product, and then eventually you're implementing a more sort of self-hosted API version of it. But at the outset, you're able to use the light version of it. And I would say to look for those types of tools that are really going to grow with you. There are definitely tools out there that are really intended for large institutions. So I've talked to companies that do certain work, and they'll say, our starting implementation cost is $75,000 just for the non-customized basic implementation. If you're in bootstrap startup mode, that probably isn't for you. So look for other solutions that are going to grow with you. And the other option there is that if you think you have something that's going to scale relatively quickly, budget for that and raise funds for that, so that you can implement those more institutional grade solutions at the outset.
I think your answer is a little bit too modest. I think the real answer is hire an Amber, hire an AML Ninja. I mean, but to be completely sincere on that, I think one of the things a lot of people do is that they think that these compliance obligations are something you can simply figure out or muddle through, and I think that can end up costing you a lot of money. There's potential cease and desist orders from different government entities, and possibly jail time and fines. I think my advice on top of everything you've said is go find someone who can help you through this, who's done this before. Because going at this alone can be exceedingly costly and very dangerous from a legal perspective. Another one, just jumping off on this, a very Canadian question. We have another from the audience. We're launching an exchange in Canada. We've had a hard time getting a fiat, a traditional bank account. What do I need to ensure I can get all my corporate bank accounts set up? And we'll talk specifically for you in Canada because this is a huge Canadian problem or challenge.
It's a huge Canadian problem. I think it's the weirdest first world problem that I encounter on a regular basis. Because as an entrepreneur, the biggest barrier to entry should not be establishing a bank account. But it is. And I'm sorry. I don't have an easy answer for that. There are some banks in the Canadian context right now that deal with MSBs, that deal with crypto companies. They're few and far between, and you want to approach them with your best foot forward. And so, I don't have consent from any of them to sort of do a public, hey, we're here, we're open for business type of announcement. But like DM me on Twitter, and I'll give you a list of ones that you could be getting a hold of. When you're dealing with the big banks, so the banks that have a big branch network, we actually say take the approach where you're just going in a circle as the ones that are closest to you, and you're making an appointment with their branch manager or their small business manager, and do not fill out an application right away. Go in and talk to them and say, hey, this is my business. This is what I'd like to do. Do you have other clients like me? Do you open accounts for people like me? And if they say right away, like, crypto, no, get out of my face, don't take that to mean, oh no, BMO will never open a crypto account. Take that to mean I should check out another branch. Branches are funny fiefdoms. And in order to be able to work within those types of networks, you need someone at your branch level that's going to support you, that's going to understand your business, that's going to know that when the annual MSB questionnaire, and this is a thing, banks have questionnaires that they give every year to their high-risk customers, and as an MSB or a crypto exchange, you're a high-risk customer, so that when this questionnaire comes in, they need to get it to you right away, because if you don't answer that questionnaire to that satisfaction, they will close your account. So you need someone who's actually going to forward it to you, that's going to take the time to answer any questions that you have about that questionnaire, that's going to send it back to their compliance department right away when you send it to them. So those are all very important things, and people that understand at the branch level and who have other similar customers are used to going through that process. They understand what it is, and they're going to be able to help shepherd you through it, and that's really the thing that you want.
And it's become such a catch-22 in Canada, because Canada has been so welcoming for entrepreneurs, for growth in businesses around crypto. Whether it's Toronto and Vancouver, I think especially, we've seen huge amounts of number of crypto businesses and crypto entrepreneurial institutions starting out, and then you've got this one piece that's just can't be solved. I think the U.S. we're seeing the banking side is easier, but the entrepreneurial side not as much. And so if maybe someone throwing stuff over the border in Vermont or something might be helpful. But right now that we're sort of seeing the opposite problem in the US. Here we have almost an infinite number of banks. And so you can always just go down the street and try the next bank or the next bank or the next bank. I think in most of the world,
I think it was hard in the US for a while too, but there were a couple of banks that really stepped up and did well and built the appropriate compliance controls at a bank level around it. And the regulators, didn't come down on them. Their world didn't end. And so other banks have started to take that on.
Yeah, it's interesting. The biggest, when you talk about the biggest threat to financial institutions in the U.S., marijuana is the marijuana related businesses become their biggest headache. Whereas in Canada, obviously, that's not an issue. So you've got these sort of different problems across the border.
Yeah, so I mean, we do still have a lot of rules around banking and marijuana industries, and it hasn't been easy for those companies to find banking, but it's becoming easier.
So let's jump. I think that was great. Let's jump ahead to sort of a final question for you. We've talked a lot about businesses and industries, banks, MSBs, exchanges, broker dealers, sort of needing to focus on KYC and AML. Who else do we need to worry about?
So I think anybody that has a regulatory obligation needs to think about it. One of the industries that I worry about a little bit in Canada is the real estate industry. So we've caught a lot of attention in terms of money laundering through real estate, in particular in sort of Vancouver and the Lower Mainland in BC. But I would say that equally there are issues around that in Ontario and Quebec and literally every other province and in particular in major cities. And we're starting to see revised numbers in terms of things like foreign ownership. I think that definitely within the real estate industry, I see that as being an increased risk. I would say within the securities industry as well, because there is a lot of foreign investment and a lot of interest in that way. And not that that's a bad thing per se, but it certainly brings with it certain risks that we need to pay attention to from an AML and KYC perspective. And those are things that I don't think can be done well without automation. I think that it's very difficult to look at something like a foreign identification, a foreign passport. So it's from another country, it's in another language. Do I really know what it says? Do I know how to do a correct analysis on that to know that it's an authentic document or that it's an altered document? And to be able to say as a human, oh yes, I can look at any passport and know if it's real and know what's happening. But, even from a systems perspective, that's something that you have to ask. So if you know that a large proportion of your clientele is going to be Chinese, then you know that you need systems that can do analytics for Chinese characters, that are going to do the right analytics for Chinese identification. And that's very different from doing the analysis for the special characters in French identifications.
And I think to jump on that, I think this is where ultimate beneficial ownership legislation, regulations are playing a huge part. I think a lot of, when we look at what's been going on in Canada with real estate, I think a lot of that was driven by shell corporations. And the more that we can uncover the ultimate beneficial owners there, I think the more successful we can be at stopping that type of fraud.
And that's an interesting one. I struggle with that as an entrepreneur and as an AML geek. So I absolutely understand why people might want privacy. And I struggle with the idea that, beneficial ownership registry for me means that my information will be very publicly doxed, if that's something that's publicly accessible. And that's something that I've given a lot of thought to in terms of what is the cost to individuals of having this type of information out in the public eye, who should be accessing it, when should it be accessed, should access to it be tracked as well. And I think those are all questions that we have to work through in terms of those registries. I do think on some level that those things need to exist, but that we need to really balance it in terms of protecting the individual and not creating a system where we're exposing the individual to a lot of risk as well.
Yeah, I think this is always that spectrum of risk versus privacy. The more privacy you want, the greater the risk is in the business that you're doing. The less risky you want to be, you have to give up privacy in. And I think everyone on that spectrum has a different area where they're comfortable. You've got, Monero enthusiasts who believe that privacy should be absolute. And you've got people on the other side who are, sort of more law enforcement side that says, well, your privacy isn't worth certain things, certain risks being possible. I think there's a great example of exactly what you were saying from an entrepreneurial perspective that came out of the Panama Papers, just sort of an interesting story. The actress, she played Hermione in Harry Potter.
Emma Watson.
Emma Watson, thank you. Emma Watson was listed in the Panama Papers. She had set up a shell corporation in the UK for the sole purpose of hiding her real estate purchase for her primary home, because she has stalkers and obsessive fans and things like that. And so it was just a pass-through company. She didn't avoid any taxes, but it was solely there to hide her ownership of a company because property records in the UK are public. And so you've got to ask yourself, I think you pointed out another great example of that. There's got to be a balance where can this information only be available to financial institutions and kept in a very private way, the way that they keep other PII.
So here's a funny concept on that, and it's interesting that you mentioned Monero. So both Monero and Zcash, and I think most privacy-oriented coins at this point actually have the concept of an audit key. So something that doesn't let you transact but lets you access information. And I think that's really conceptually interesting on a couple of different levels. And on one of those levels, I think, you get into, so who should have an audit key? And what can you do with it? And then is the access with that key tracked and traceable? And what does that look like? So does it create an entry when you use that to access information? I think those types of models are worth thinking about as we move forward.
Yeah, and I think, we've looked at, there's a number of investigations that are going on as well into portable identity, where it's not your actual information, but it's an encrypted, a hash of your information that you can then verify the hash without having to know the actual primary data. There's a lot of interesting things that are coming along with that technologically. I think the interesting thing is the math and technology involved with understanding it makes it more difficult for people to be comfortable with, which you can really say about cryptocurrency in general. The fact that cryptocurrency is based on very, very, very complex math scares a lot of people away. People sort of trust organizations and people. Math is scary, and so especially when you get to really complicated math. So there's some interesting things there as well. So we've reached the end of the hour. So we've run out of time for this webinar. Hopefully the first of you. I've greatly enjoyed the time speaking with you today, Amber.
Thank you. Thanks for having me. You can
find Amber at outliercanada.com or at Outlier Canada on Twitter. You can find me at iComply Investor Services, and I'm at Complying Crypto. Thanks everyone for your time today. This has been a wonderful hour, and have a great rest of your day.